Greetings, members, one and all of the Salivation Nation. Gold and silver's wild ride after the Russian invasion of Ukraine. Let's explore. It has been a very interesting 15 to 20 hours, not only in terms of the events of Eastern Europe, but also with regards to yours truly in this channel. More on that later on, but let's get to the news of the day. I recorded a video yesterday, and yesterday evening, not understanding that, hey, an attack was imminent. I mean, like right around the corner within hours, and silver was going to go up to $25 an ounce. I guess there was some rattling going on and around the news cycle, and silver did in fact go over $25 an ounce by the time that video was published, but it was recorded before the invasion began. So I released it a little bit earlier. I encourage you to go back and check that video out because I kind of lay out kind of the possibilities of what could happen, and mostly it came true. Silver, in fact, did pull back much quicker than I expected. It's very difficult to kind of really predict the timing of this stuff, but I could not have predicted that we saw such a wild ride with both gold and silver. You're looking at the prices right now. Rhodium is the only metal that's up, staying up. More than likely, it will pull back too. Next trade that is recorded here at Kitco. But gold and silver and platinum and palladium all down on the day. Yea, though, they are still pretty high, and gold is still above $1,900 an ounce. But silver is still above $24 an ounce, but there is some interesting reasons why this has occurred. So let's go back in time, shall we? Boy, a lot has happened in the past hours here. Gold and palladium jump after Russia attacks Ukraine. And we're reading here from Reuters. Gold hit a more than 1.5-year high on Thursday as investors sought cover in the safe haven metal after Russia invaded Ukraine, aggravating supply risk to palladium and powering prices of the autocatalyst to a 7-month high. Spot gold went up 1% to $1,926.51 per ounce at 131 Eastern, having earlier touched its highest level since September of 2020 to $1,973.96. Although earlier in August of 2020, it was up over $2,000 and almost $70 an ounce. U.S. gold futures settled 0.8% higher to $1,926. Traders attributed the retreat from the session highs to increased liquidity during U.S. trading hours as equities attempted to recoup some of their steep declines. And we'll talk about that in another article and story that talks about the wild ride back down. The assault on Ukraine was the biggest attack by one state against another in Europe since World War II. It's more than what the market was anticipating, said RJO Futures senior market strategist Bob Habercorn. If Russia in fact does take Kyiv, and the international community has an aggressive response, gold will trade up over $2,000 fairly quickly. And the least path of resistance is up because there are just so many unknowns right now, Habercorn added. Of course, that has turned about very quickly here, and that quote did not age well in the last hours here. More on that here momentarily. Palladium understandably rose because the supply is limited. Russia is one of the producers of palladium. Of course, if there's sanctions and people are not allowed to buy palladium from Russia, well, it makes sense that it would go up. Potential disruptions could have a far more significant market impact on the platinum group metals, particularly given expectations that easing supply chain challenges in the second half of 2022 and a recovery in auto production will support increasing auto catalyst demand, said Standard Chartered analyst Susie Cooper. Russia's Nornickel is the world's largest supplier of palladium and a major supplier of platinum, both used by automakers and catalytic converters to clean car exhaust fumes. And so the jury's still out as to what's going to happen there with some of the sanctions. And we'll get to that here momentarily. Platinum actually dropped to just over $1,050, seeing a relatively volatile session after rallying to a high of $1,126.18. As long as the breadth and length of the conflict remains uncertain, I don't see investors wanting to sell any of these Russia-sensitive metals or energy. I know I'm not, but it seems like some of them were doing it in the ETF space, and we'll see how that plays out. So there's that. So that was essentially something that was happening while the metals were popping. Then they dropped as Biden announces new Russia sanctions and traders reassess the Ukrainian crisis. So within hours after the full breadth of what was going on, essentially this is a full-scale invasion to, quote, demilitarize Ukraine and denazify as well, according to Putin here. The gold markets dropped below the key $1,900 an ounce level after surging 3% on the day as U.S. President Joe Biden announced new sanctions against Russia and investors reassessed the situation in Ukraine, from this article from Kitco News from Anna Golubova. Biden introduced new sanctions against Russia on Thursday afternoon following Russia's full-scale invasion of Ukraine. New sanctions targeted more of Russia's banks, the country's ability to do business in other currencies, including the dollars, euros, pounds, and yen, and state-owned enterprises. This is a premeditated attack, Biden told reporters. Putin is the aggressor. Putin chose this war, and now he and his country will bear the consequences. Biden noted that sanctions are meant to have a long-term impact on Russia while minimizing the effects felt by the U.S. and its allies. Markets were relieved to hear that the new sanctions were not meant to hurt the energy market. And I think, folks, that is why prices scaled back for gold and silver. Because in times like this, we see oil pop out. Typically, precious metals do as well because of the uncertainty of the energy crisis that could loom from this. Our sanctions package is specifically designed to allow energy payments to continue. Now, the unfortunate thing about this is that that's not going to hurt Russia that much because the vast majority of their income from foreign countries is from energy. The president also said that the U.S. oil and gas companies should not exploit the Russia-Ukraine conflict to hike prices, adding that he will be releasing additional barrels of oil as conditions warrant. In reality, what he should have done is said, hey, I'm going to ease restrictions and allow U.S. companies to produce domestically and ramp up production, utilizing the free market principles in order to keep prices low, so that we're not as reliant to where the Straits of Hormuz will be not a hill of beans to us. We were there before Biden became president. In addition, in reaction to this news, gold gave up all of its overnight and daily gains and traded below the $1,900 an ounce level. April COMEX gold futures were last at $1,891.60, down 0.98% on the day. Earlier in the session, gold hit a daily high of above $1,970 an ounce, as we reported earlier. The stock market paired gains and was trading in a positive territory after Biden's announcement. The S&P 500 was up 0.23% after falling into correction territory, and the Nasdaq rose 1.8%. The Dow was still down 0.84% on the day. So there's where we're at. There's the situation at hand. So let's take a look at this again. So now you know why gold and silver fell. And in this case, silver pretty much followed gold on the way down, and as in usual fashion, in a more dramatic flare, down over 1.5%, whereas gold is down only 0.33%, a little more than that. Gold still above $1,900, silver still above $24. The situation is still volatile. These metals could move in the other direction at any time. And I believe now that everybody is absorbing what is happening in the situation, they pretty much predicted, and I pretty much said it was going to happen as well too. Does not surprise me one bit, considering Putin had troops amassed pretty much on all sides of the country, and we knew what he was angling for. And So really, when you think about it, it's how the markets react. We can put our opinion in there, but in terms of gold and silver prices, it's how they react to the market. And they're down a little bit based off of Biden's statements, and how these sanctions will be worked out in the coming days. Now, if things continue to progress in an unexpected manner, and there's threats to other nations, especially if they are NATO-backed nations, likely you will see much more chaos in the markets and probably higher gold and silver prices. We'll see how it plays out. Now, we'll continue to follow this situation, but I need to give a little personal update here, because as this was happening, for those of you who are my regular live streamers, my live stream cut off abruptly the other day because I have a coolant problem on my PC. And as you know, I rely heavily on the PC, on my computer, for the live streams and for making videos and the like. I'm almost dead in the water without it. So I recorded this morning's video, which was recorded yesterday, as I was trying to replace, or just after I tried to replace the cooling system in my personal computer here. And I ran into some problems. The computer would not turn on. I thought, oh my, because I had to literally take the whole thing apart in order to do it. And I've never done that before. So it was a very troubling situation. I'm not completely out of the woods yet, but I think I'm good to go. I'm going to do some backing up here in time. And so I've missed a lot of the other content and being able to interact with you guys over the past day. But nonetheless, I do try to interact, watch other videos and the like. So I appreciate you guys sticking with me and being patient with me through this. And I want to extend a multitude of gratitude to you all for taking the time to watch this video. And I want to encourage you to please rate, share, comment, and subscribe.